we saw our 930 candle dump. Now, we typically like to wait until at least 950 for a reversal, should we get it, right? And this happened at literally at 9:49. So this is your reversal window. Ran for about 10 minutes or so before the new hourly candle came out. But whereabouts did it run to? Ran to the 930 high. Bang. Right there. Right? Coinciding with, where are we? With that 15-minute, and you had an imbalance there as well. So structurally, we're looking at this. We're looking at this not being a swing. For me personally, this area was low confluence that ended up being the low of the day. Right? It ended up being the actual midpoint of the low of the range, if you take the entire range. Usually I don't. Usually I look at the manipulation leg. And then the high of the bullish candle, the low of the bearish candle. That puts us at 261.25, which was about 2 ticks off. Regardless, we'll go into liquidity seeking and whatnot with that, but I thought there would have been some pretty good confluence should we have retraced all the way back down to 220 or so. This is important because this is going to set up for a major trade of the day. Let's get rid of this. So 15-minute wise, we had our SNDR that broke SNDR here. Cool. So we're looking at minimum a retracement. At minimum. Right? Retracement to where? We're looking at this area that snapped below this low. Structural. Right? You could argue this one as well. So if we're looking at the upside objective and we're, say, here, and you're looking to the upside, you're looking for what areas were responsible for breaking major structure. This range here, you had this major low, these major lows, both of which were broken from this area here. Right? And you'll notice for confluence that this left, and we barely tapped into it. This is your higher time frame. We talked about this yesterday. Your higher time frame being spooling so heavily that it's not cleaning up structure efficiently. So that midpoint is a key area of interest, and you have your pocket above there for liquidity purposes. Call it 418.25. Right? So we end up trading up to it, running everybody out, bang. So there's two things with that, right? It's not just, and we talked about this as well, it's not just trading up into the area of interest. Very rarely will you see trades do this. And when it does, you're not involved. So if I was watching this and it was here, and this just continues lower without taking liquidity, that to me is a low probability event. And I don't want to be involved in low probability events. I'm looking for this high. You got your initial tap off the midpoint, as you do. That usually trades back down, either to an imbalance or to the prior area of interest. You'll notice this is actually a valid swing. First tap, break structure. Second tap, you usually get a double bottom off of. Right? But more importantly, we're looking for a trade above this high to liquidate them before the trade goes down. This created a valid internal swing. Got held up. And up we go. And then you'll see this manipulation here as well that finally ended the trend and confirmed. Confirmed underneath this candle. Now, ideally, you get a trade back in and failure to continue your movement. And lo and behold, we got it. Right? Quite honestly, the majority of the time with these, this candle, this bullish one that closed on its high there, usually you'll see a large wick where we're trading up to this order block and failing. Instead, we got a body closure on the 15-minute, and then the next candle opened and just demolished price. And in fact, in 45 minutes, we just dropped down. That was right at the open. This is all leading up to our narrative, because what have we now done on the 15-minute structure? We've now snapped this protected low. So your concern is that this fake flip is just trading back into our prior zone, right? Our protected low being here. We didn't have a body closure underneath anything in this. This was our last structural candle, closed above these. We got our body closure there. We finally traded above and confirmed here, putting this our protected low. Sweeping and failing it on 15-minute structure, which really threw a wrench into our plans this morning, giving us our morning range. Right? So now you've got these imbalances. And to reiterate something from this morning, you might have been watching the 5-minute candle print here on the imbalance there, which then led to this low. But you're not taking into account that you now have a 15-minute imbalance there. Why is that important? It's important because this 5-minute high that we've tapped into now should get ran as our 15-minute trades into the imbalance. Right? And we do. In fact, quite heavily. Tapping into this one here, back into this prior range. Now, what do we look for in here? Because many caught this long, and that's beautiful. I think some were short in here, and that's lovely as well. Some were looking for longs to get short. Some were looking for bullish price action to fall. But, hey, Scar, I haven't seen you, man. Hopefully you're doing well. So we have this candle here. This is our last structural bear candle. It's also important because it's the one that broke below this protected low here. So what do we look for and what happens? We got a body closure there, cool. Sideways, trading up, and then what happens? We close above. We close above. Now what are we looking for? You've got two schools of thought. You've got your ICT, midpoint, or pocket, lower. Sorry, it'll be drawn like this. You could argue the manipulation, in which case you're looking at these. Either way, you're looking at a midpoint, trading back in. Do you have confluence? Yeah. Right? You might consider the low of this candle. However, you're expecting a mitigation of this area here. Right? And I personally use this. So I'm looking for a trade back into the prior zone. I'm not looking at this candle because that's manipulation to me. You could argue even this. Either way, I'm looking at somewhere here at 317. And then failure. Right? So we have a nice fractal here. We have a nice fractal there. This goes sideways. We're thinking if we're here, you're looking at where's the liquidity? Always. Where's the liquidity? Where's their lows? A lot of sideways here before breaking above. So our liquidity is underneath this candle there. You got your lower time frame swings, right? Down, up, down, up, down, up, down, up, sideways. Same sort of thing. This ends up breaking this and then trading lower. if we fail here and we're looking for confluence on the way down, you've got your midpoint at 17, like we mentioned here. Possibility of taking that candle, fair enough. I personally don't trade with like a 2-point stop, right? So if I'm looking long, I'm looking at, do we trade into this area? Sorry, it would have been there. Right? And if I get a signal long and it takes liquidity and then fails, say I'm in from 24, I've got my stop here. Or you put your stop underneath the low if you're looking for a larger move up. Right? But ideally, you're looking for what area is the target of the movement back down. And then you're looking to see, do we get a candle like these? Or do we have something that looks like this? Why is that important? It's important because if we're going to fail on a higher time frame, we're really going below this. We don't want to be involved. However, if we're lethargically moving down and we're putting in sweeps and failing, then we're really going up. Usually. I'm looking at this candle being a range, and I typically don't like to factor in manipulation. So if I'm drawing pockets, of, say, and we'll get to this in a sec as well, like if I was drawing the range from here, this candle actually ended up closing bullish, right? So I can draw it from here. So I draw like the last bearish candle and the bullish candle. That there, right? Now, if you want to be cute about it, what I typically do when I'm looking for retracements to continue higher is I draw it from the SMDR itself. We're going to go into this trade because that's essentially why that trade happened there. Right? And in which case I would actually be drawing it from here off of this 5-minute chart. Because I'm looking at this candle being manipulation, this being the last up candle from the SMDR. And if I'm drawing it in reverse, then I'm looking at the last up candle to there. Sorry, that should be in reverse. Right? And that gives you your accurate areas of looking at it. Right? This being manipulation, that being manipulation. Does that make sense? It's actually an important nuance as well. You might think it doesn't end up mattering, but honestly, in my back testing, I've seen areas of interest that end up here and then the low happens here because they're drawn incorrectly. Or worse, you have your area here and the actual area should be there and now you're involved and then you get stopped out before the real move happens. That's the worst. That's the worst. Now, some important nuance from this morning before we get into this nonsense. If we're here, do we have a confirmed low? We do not. We've attempted multiple times on both ways. We've now got manipulation lower and higher because this is our candle. And in fact, that ended up holding until we saw this here. So there was no flip in here actually. Sorry, you're talking about this. Yes. Right? But we want to confirm that this is a swing. Oops. Right? This is mitigating down to this area of interest, which was our last swing, which would have been this. Right there. swept the protected low, traded violently back in. That's kind of our sweep model. But quite honestly, in the higher time frame trend, this is a dangerous play. That's a dangerous play, right? You got to take into account like the range bound PA here makes this more likely to be manipulation versus if we did this, we were gone. Right? That's when I would avoid this sort of sweep model. But in this case, what we end up having, yeah. And if we look at our higher time frame as well, right? You've got lethargic, spike down, retracement. We're expecting to get in line with the bearish trend. Now, here's like, this is the topic of the week, isn't it? And quite honestly, I think everybody's having this conversation too. And you could argue it from both sides. I know Ty and I have talked about this about 4 times. Mikey and I have talked about this about half a dozen times of what our expectations were in this. You have a valid high. This moved. We failed above here, which absolutely unloaded. Ty was talking about this, that this failed here, which yielded that strong bearish movement, right? And then it was confirmed yesterday with the SNDRs and whatnot, which really unloaded price after that. So now what's our expectation? Well, ideally what you get is you get something like this. You form a high, you have a strong movement trading away from it, you trade back into the order block and you fail, right? Usually you get your high put in by a bearish candle engulfing the prior one. You trade back into the prior bull bar and you sell off. What have we got? So far, we've done this. So the question is, not that I suppose it matters too much since we trade what's going on, but you're seeing, what are you seeing? You're seeing people that have large amounts of money pricing in both ways. This movement went from 260 up to 340, 80 points. Straight up. That's one straight order. The market traded back down to it, and then it swept and failed, providing another one. To me, I'm targeting here. And the reason is because this candle, I needed to close underneath this. This was a violent sweep that traded back into this zone for me. And that is a valid zone, right? And has now failed. We got our push in the morning, trapping all shorts. Accumulation, manipulation, distribution. So how do we get involved? How do we get involved? First off, when do you know this is a range? Or when are you expecting it to be a range? We have 5 minute is very, you can kind of tell maybe in here with the candle structure that you got a bit of a range going on. Certainly on the 1 minute. Your 15 minute, you don't really want to establish that it's a range off the 15 because now it's 11:15. You've missed about 10 to 15 trades, right? You could argue here at 10 o'clock, you're failing above, you're failing below. Rangy. Cool. Right? So we know, based off of what happened here, for sure, but even before that, you've got underneath this candle, violent move back in, violent move down, violent move back in. So even before 10 o'clock here, I think we were talking about this leading to more upside of this zone. And if you're looking at the pockets, oops, you're looking at here, right? Does that coincide with anything? Yes. Did we short that this morning? Challenging to get a hold of. I wouldn't be surprised if the majority missed that, right? There's no credible signal here to be taking it. That's a location-based trade with confluence, and it was violently down. What I typically look for is inability to really generate higher time frame movement up when I'm taking aggressive trades out of locations, right? And if you're right, then as soon as you get that bear bar, you're now looking at manipulation. Cool. And then when you get the attempt to rally and then trades away, now you're break even inside the zone. And you'll notice this actually violently dropped down quickly. And I actually took profits on that because I wasn't sure if this was going to provide internal movement to go higher, given how bad this high was. It ended up saving it for later, but that's not here nor there, right? And then what ended up happening was we traded back down to where? Back into our pocket. We actually manipulated lower, about 15, 16 points lower, right? And this comes with that manipulation we were talking about. So I have a pocket in here, cool. But what do I need to see? I need to see something taken and swept. That's that low there. Not the best not the best area that I wanted to see, right? Now we got a few trades out of scalps in here, right? You get your pocket here, traded back up to the 23.6, beautiful. And then we called that one live. There was this one in here when we were failing underneath this candle structurally, 2 sweeps, bang. I grabbed that one. There's a bunch of scalps in here, but the only reason I scalp is when we're inside of a range, and I'm expecting range-bound type PA. And by range-bound, I mean failing lower, failing higher, trading away, to fail lower on an intermediate time frame to trade away, to fail higher on an intermediate time frame to trade away, to fail lower on an intermediate time frame to trade away. The challenge with higher time frame delivery is that you now have this high that wasn't swept. That high was not swept. You're expecting this high being weak. You've now got failure here. You would expect this to take that high. Instead, we did not. It becomes even more tricky when you get higher time frame price delivery all the way up. And then just accumulating sideways with nothing going on. So again, it's not these candles that end up being initiative that we're looking at. It's the response to them. Are they defended? Or do they become liquidity? Look at this one. You could argue it took that low and then failed. Fair enough. You could argue it's at the bottom of the range. Fair enough. These all have something in common. The trade back up was met with a body closure underneath. Right? This one took a few candles before it finally did. but that actually ended up trading back up into the SNDR and then failing. And that, when you're looking at this area that delivered that candle, should you trade back up, this is the exact same thing we were just talking about on the daily chart. Trades lower, trades back up to where? That area, and rejection, leading to drastically lower prices, right? Spike, trades back up, drastically lower prices. Even this one that led to a smaller sell-off inside of this bullish movement. Trade back up, failed in here, lower prices. Comparatively, that's only about 500 points, only. The curious thing again about this move is that we got that here, didn't we? That looks eerily similar to what we're looking for, doesn't it? Our expectation would have been lower prices then. And we got this, and then this, and then finally a failure with the bull bar, spike down, and now an inside candle. Arguably rejecting off of this. If we are going higher, we're not out of the woods yet. But let's get back to how we could have traded this better. As you guys know on the stream, after this movement down, I didn't like this. The reaction from this, obviously very strong. We then entered a range-bound environment. By a range-bound, I mean we closed above this, and then we closed below that. So I'm looking for failures down here inside the pocket to trade higher. And I'm looking for failures to trade higher to then trade lower. Now, what I failed to miss this morning was that I eyeballed the chart rather than actually checking this, like a rookie. And that, by one tick, actually did take this high. Even if it was equal highs, that's something else. But typically when I see equal highs or equal lows, I'm looking for it as liquidity to be taken, whether it saves it for later or not. So this strong movement, looking at this movement here. Now we actually got a body closure underneath, traded back in, and then left. What are we looking for with this movement here to trade higher? We need a body closure above what? The last structural bearish candle. So, scalp long, looking for this. Downward runner immediately. Trade sideways. And then dumps. Fine. Fine, right? This is an intermediate time frame sweep, right? But what's our guiding light as well? We're bearish in this. Our structure is bearish. So when we're having large movement, eventually we're looking that unless we flip structure, right, which can be the idea when you see these failures, right? But these long movements, we're not looking here or here unless price breaks structure and then dictates. But we can't go long in a bear trend expecting to break structure. Similarly, you can't short in a bullish trend expecting to break structure. If it does, great. And that has to do with the significance of the area that you're looking in. Right? We'll get into that in a sec. So now we're leading short. That was a quality short there for sure. Internal double top, taking liquidity. Might have even happened inside of the area, which would have been Annoying. Yep, of course it did. Beautiful trade there. Man. Yeah, that should not have been missed. And then what do? We build consolidation here inside of this area. We can't even attempt to test this candle's high, which ended up being a liquidity void for later. And that forms our SNDR taking this low. Dropping down to the midpoint of that aforementioned area of interest. And then violently up. In my opinion, no real way of getting involved unless you're a level-to-level trader and you're looking for this to trade back up and you're taking your stop there. No retracement given, nothing. We break SNDR, fair enough. So now you're looking at the retracement value of this. Oops. Right? And again, that just knifed through. Nothing doing. Where's your liquidity? Honestly, this move, you don't have any liquidity in that at all. So we stay out. Right? These areas aren't magic in the sense that price delivers to them because it's the 61.8 of this. The market is a liquidity seeking machine, and if there's no liquidity to be held in this leg, guess where it's going? It's going to the low. And you'll notice on the way up as well. Yeah, they accumulated a lot of different people that were shorting and whatever else in here. You have some liquidity here. We took that. In fact, there was a brief sell-off. But where are we going? This high. So these V-shaped movements, I don't remember the last time that we really saw something like this. Right? But one last closing thing before I have to run. We've got your SNDR here now on your 5-minute time frame. And this is where we draw extensions from. Your SNDR here that broke this high. This was a flat bottom candle. So you're drawing it from here. You're drawing it to there. This is the last up candle in this move. We chop around in a range. This failed to make a new high. We came down, liquidated it right into our pocket here, yielding a strong move. This failed to make a new high, but when is it defended? It's defended when you get lower time frame manipulation, lethargic movement, into where? Right? You've now got your violent movement out. So now what are you looking at? You're looking at your lower time frame area that this is now going to drop into. Okay. I'm going to stop the